Okay, class, I've started recording. At least we'll have our recording when I drop them into Moodle. I'm going to try my Google Hangout, and anyhow, I didn't have any luck with the first two sessions, and I did all the instructions they told me to, and I set them up, and one did come on this morning, and it's 12:30, and taxes is supposed to come on. Whether it will or not, I do not know. But let me try something else here on Google. It's not bringing up even the page that I wanted. Hold on a minute, I'm piddling. I'm assuming it's 12:30 and Google Hangout's supposed to start. It don't have the page that I had once created. And here we are. Okay, now you had an email, you had it in Moodle. Hopefully you've looked at this link, and I have joined here, but nobody is joining me. Mine has a place on it said Google Hangout Meet. I clicked on that. It's getting ready. Whoa, do I look bad? I'm in my man cave. Says no one else is here. I'm gonna join it now. Whoa, I don't look pretty on videos, cameras, or movies. I was hoping somebody else could join me. I don't know what to do when they asked you to join me. One person, the county principal, was asked to join, and I accepted, but nothing happened. I'm looking at meeting details here. Joining information. I gave you that link. You can dial in and pin. I'll use those later, see if that will help. But right now, it says present now. The entire screen. Whoops. And I'm sharing, but nobody's asking me to meet folks. So I don't know if this is even coming or not. I'm just going to minimize it in case it is coming in. And I'll go up to my camera, and maybe you can see me for a minute. If you can't, that's okay. I'm in my man cave. That's just a TV that you're looking at, and a router station, I suppose. But if I go up to camera one, it's not zooming in on me. I don't know why. Maybe it's because I look so bad. But it's not coming in on this camera. That's okay too. 'cause I don't care if you see me or not. Camera 1 is working good. Camera 2 is. This one is not. Well, I'll move up some colors here. I don't think that helped. Refresh rate. Anyway, none of that helps, so that's okay. We'll get rid of the camera. Now, I'm going to record, which I'm doing, and I'm going to PowerPoint, which I'm doing. But first off, I want to talk to you a minute. VITA, folks, it has been canceled. That is sad. Now, the IRS filing deadline has went up to July the 15th for your personal taxes and for mine. Now, if any of you have any in progress for VITA, please finish those. And Sarah and I will keep checking it, and hopefully we'll get them e-filed. Will we get back to filing tax returns? I do not know. Anything can happen, but right now, Bluefield State's in a shutdown. If you don't have internet, you got to get this somehow. But if you don't have internet, I guess you can go sit outside Shoney's, but McDonald's or Starbucks or on campus. And I think they will leave a room or two on campus open. They may take your temperatures to go in the building, but they'll leave it open. So anyhow, what is the state of the economy? Bad. Stock market's bad. As I mentioned, in Costa County, most of us at Bluefield State has lost in our retirement, probably 30%. So if John Doe had 100,000 at Bluefield State in his retirement, he's now down to about 65 or 70. Hopefully, depending on what it was invested in, we have plenty of choices. It would only be down 20, 25. But anyway, back to taxes, folks. We had our one test on chapter 11, 12, and 14. I haven't forgot about chapter 13 yet. We need to look at some problems on that section 1231, 1245, those type gains, and 1250. So we'll get back and look at some problems. In the meanwhile, when we get through with this session, I wish you would please work the even problems in chapter 2 for corporations. They're not that hard to start off with. All right, we've got to look at tax advantages of different companies, different setups. We've got partnerships, corporations, proprietorships, and we want to look at setting up a corporation. Then there's always tax planning opportunities. Now, if we get corporations and sub S, I'm okay. We don't have to do partnerships. Sub S is just like a partnership. But LLPs are getting conference, and that's a limited liability partnership. And this is limited liability corporation, and then there's corporation. But I'm worried about corporations. That's called a C corporation. Now, a sole proprietorship, we do a Schedule C, and we've done maybe one or two of those. When it mentions second layer of tax, I hope somehow or another this popped up. It's going to let me use it, thank goodness. Some of my solutions it won't. Second layer means a corporation pays out dividends and then they pay taxes. Dividends are not a tax-deductible expense. If a corporation were financed with bonds, bond interest is a tax-deductible expense, but dividends are not. All right, but in a proprietorship, you have free will to withdraw cash, no dividend, of course. Your business rate's the same as your personal rate. Business loss can offset ownership. If you have a loss, it offsets your W-2 wages if you work and also have a business. Qualified business income deduction allows, again, 20% of profits, but we've got to look at those qualified expenses. So, if you have W-2 wages of $20,000 and you have proprietorship income of $10,000, that all ends up on a 1040, and you're taxed on $30,000. That's a simple structure, easy to start. Now, who makes up a proprietorship? A lot of small retailers, a lot of small service business, tax preparation, repairman, a lot of small zip-in markets, a lot of proprietorships, folks, and they make up the biggest number in the United States. There's disadvantages. Profits are currently taxed even if you don't take them out. So I think I told you that one time. This little zip-in market I had, they had about 180,000 of net profit. They only took out about 80. That was a withdrawal. But what were they taxed on? The 100 they left in? No. The 80 they took out? No. They were taxed on the 180. I had explained to them where their other 100 went. They bought coolers and they stocked it up in inventories and they bought a new pickup truck for the business and blah, blah. And a proprietor will use the calendar year. January 1, December. You can give yourself all kinds of fringe benefits that don't matter. They're not tax deductible, so you are taxed on them. Okay? Now, a partnership takes two people, don't it? One or more. Partnership has the highest failure rate. Failure rate in the country. I don't advise a partnership anymore. Partner A and Partner B need a good agreement called Articles of Partnership. And here these two partners make up 50-50. Now, in Principles of Accounting and Intermediate, I'm sure you learned a lot of ways to split partnership income. 50-50, based on time. Give them an interest rate and a salary, then share profits, and some ratio. And you learn that a ratio, a 3-to-2 ratio, adds up to 5. That's 3/5 and 2/5 of profits. That's 60% or 40% of profits. We won't go into that. That was accounting principles and intermediate. A general partnership have unlimited liability. I mean, you are liable. Liability could be greater than your capital. They could take your personal assets. But now, a limited partnership, you're liable only up to your invested capital. You can lose everything you invested, but you can't lose your car and your house and your shirt. You've got to have at least one general partner and one limited partner. All right? To be a limited partnership. You can also have secret partner. There's no double taxation like the corporation. Same advantage as a partnership. Your marginal rates may be lower than the corporate rate. Contribution, general, and distribution are non-taxable. If you take out a $10,000 withdrawal, it's not taxable. It's going to be how much the partnership made income. All right? And if you have a loss, it can offset your W-2 wages just like a proprietorship. And you can still get that 20% deduction. Now, big disadvantages. whether you take them out or not, same as proprietorship. Tax rate could be more than the corporate rate. No tax benefits, fringe benefits, and they got to use the calendar year. And what you saw about a partnership is about the same thing you see for proprietorship. They have unlimited liability. Corporation has limited. If you're a stockholder, they have limited capital. Some corporations have unlimited capital because they can sell stocks and bonds. They both have the tax advantage in a normal situation. They both must use the calendar year. I've got a cough from allergies and sinuses. I don't have the C virus. Hope none of you all have it or been in contact with it. Now the C virus, there for a while there was no cases in West Virginia. That must have been when all the moonshine was selling out. People were disinfecting their throat with moonshine. So now I guess they go at home for relaxation if they're not working. Anyhow, there was a case up in eastern West Virginia. That's up near the Virginia-Maryland border. And pretty soon it trickled down. There was a case at Bluefield College on the Virginia side, and that person did not live in Southwest Virginia or in the area for West Virginia. Don't know where they went home to or what about them, but they tested positive. I don't know if Princeton has a positive case or not. You all can Google it and find out. All I'm trying to tell you, don't feel like you're invincible. Jessica, I know you're going to probably be around a lot of people at the grocery store. I hope they put you in that office so you can stay there and not get out and mingle. And of course, I guess safe, you're only mingling with a couple of people on campus if you're still allowed to work. All right, that's the virus. If you want in a building, I guess they'll scan you before you go in, see if you have a temperature. We're pretty much locked out. Now, as far as this tax course, we will continue. You will have 2 more tests by hook or crook. They do have Proctor Track available to all students for free. College bought it. I'm not good at putting a test on Proctor Track yet, but I can learn. I at least have a couple of people available up there to show me. So, with that in mind, we will continue. Keep watching Moodle. Keep working some of your problems. We'll look at some solutions. Since this is not live, it wouldn't do you any good to text me. But please, even if you're watching a video and you have a question, write it down. Text it to me. My phone is 276-964-3431. Text it to me. Email it to me. I'm checking my email often from my cell phone. So email or call me. Folks, I'm available Tuesday, Thursday, 8:30 to 9:30. I'm available after this class until about 3 o'clock. I'll be available on Wednesdays from about 12 to 4. That's my normal class and office time. And the only thing I am escaping is VITA. And I don't like staying home. I don't like working from home. I like seeing new students. I like being there. I like helping these old people. A lot of people are probably enjoying the vacation or the layoff or work from home. I do not. Anyhow, 52 years ago, I started teaching with integrity, putting in my time, not trying to avoid anything or get out of any duty. I want to end up my career doing the same thing. Avoid nothing. I do not want to get out of my duty, okay, or any duties. Hopefully you're the same at home or at work and with your classes. Please keep up with your classes. Now, a disadvantage of a partnership also is disagreements. It's a big disadvantage they didn't list. I was in 3 partnerships. I had a disagreement. One didn't have a contract. I sold out. It was a used car lot. I sold out to this fella. I was in another accounting partnership with a lady. I was so busy, she was doing most of the work. I gave it to her. And we had we were starting to set up pretty good practice. I was in used car business with my brother and nephew. Then I had a good contract. If one wanted out, how you got out, how we paid each other, who put in the most time, did they get paid per hour or what? So disagreement. A marriage is like a partnership. I think it should be 50-50. In Jessica's case, it'll be 90-10. She'll be 90% boss and 10% compromise. Come on, Jessica, smile at that. Because I don't know who you're going to marry, who your boyfriend is, but you're good at finances, you're good at figures. I'm sure you could do better with a budget and a checkbook and so forth than most people you might marry. Now we got a corporation. We got shareholders. All right? And we got a board of directors. Okay? Now shareholders sometimes are called stakeholders, what have you. This is a C or S corporation. Sub S, treated like a partnership. That's why we look at a sub S. If you can do a sub S, you can do a partnership. And yes, you can get TurboTax software to do partnerships and corporations. Most TurboTax software will do personal and C, but not partnership and corporation. Advantages of a big corporation. Think of General Motors, Ford, Chrysler, Fiat, any of those. They're down to we've looked it up a few times, folks, it's 20 or 21%. Okay. Shareholders, employees can take tax-free fringe benefits. Now, if I own some of this corporation, or if I own 50% or what have you, I get the fringe benefits of this corporation. All right? Corporations can use fiscal year. We know that can end in March and June and July and September, whenever we want it to end. We know that a government, I think the federal government ends October. Bluefield State's in June 30. They'll start their new year July 31st. Now, a state government, West Virginia, wants to operate on 0 deficit, 0 surplus. Now, during this time of the virus, the federal deficit, I know it's going to go up by about $2 trillion. That's this package that they're talking about. Now remember, $2 trillion is not that small. That's thousand. It's not that small. That's million. It's not this small. That's billion. Here you are with 2 trillion. That's a heck of a lot of zeros, 12 of them. Okay? 12 months in a year, 12 zeros, and 2 trillion. So our national debt is going to go up, of course. West Virginia, I don't know if they ever have to use the National Guard. The federal government's paying for that. And here we do have that rate given, so it's a definite 21. The double taxation thing, they pay you dividends. Let's say you pay 20% on your dividends. To qualify, it may be only 15%. Then the corporation pays 21. That's what they call double taxation. And yeah, you're going to have taxable dividends. There ain't no may have to it. Net operating losses and capital losses stay at the entity level. If a corporation has a loss, you sure can't take it on your personal tax return. The corporation cannot take 20% of a business income deduction. Now here's the S corporation. I like an S corporation. It's what I encourage my son to do, but he'll probably go to a limited liability. So an S corporation, not subject to tax. It's treated like a partnership. Shareholders may have a lower marginal rate. And losses, if they're non-passive, can offset your income. They can offset your W-2 wages on a 1040. All right? Qualified business deduction allows for this 20%. Now, Trump and this package is going to come up with a lot of interesting things, folks. They may forgive some businesses not to match the payroll tax for 3 months. They're asking that landlords not kick out or evict renters if they can't pay their rent during this time. They're asking you to stay 6 feet apart from people. Those spring break kids that went down to Florida on the beaches, the last I read, 5 of them have this virus. They thought they were invincible. Maybe they'll get better fast. But I'm sure some of them will go through the pain of this virus, whatever pain it causes. All right? So there's advantages of an S corporation. Disadvantages, they're taxed on all profits. Even if you leave them in there, your rate could be higher, just the same as a partnership or proprietorship. No non-taxable fringe benefits. They got to use the calendar year. They have to have a limited number. I forget how many. It's quite a few, though. Now, advantages of a C corporation. Here's a couple they didn't mention. If I got a small business and I incorporate to a C corporation, I pay F and SUTA. I can lay myself off and draw unemployment. I am not an employee of a partnership or proprietorship. I can't do that. I'm an employee of this corporation. This corporation deduct my salary as an expense. I can draw unemployment. This corporation can give me a lot of fringe benefits, which I won't be taxed on. Advantages and disadvantages. We'll look at these are getting popular, so we must look at them. Limited liability partnership and limited liability corporation. Now this limited liability corporation may be as good as a sub S, because those sub S in some states have to pay taxes. Can elect to be treated as a partnership or corporation. If 2 or more owners default is partnership unless election to be treated as a corporation. If one owner defaults, is a disregarded entity and treated as a sole proprietorship unless elected to be treated as a corporation. That's a bunch of jargon. All right, you can elect to be an LLC or an LLP. No recognition of gain or loss. Requirements. Transfer of property must be solely in exchange for stock. Transfer must be in control of corporation immediately after exchange. Now, read about this section 351. In other words, I want to transfer a pickup truck with a fair market value of $15,000. I want to exchange that for stock. What basis does my stock have? 15,000, of course. But now this must be in control. We'll see how that works in a minute. This is the normal situation. I can give a $15,000 truck anytime for stock, and that would be my basis. Shareholders takes a carryable basis from the property to the stock. Fair market value of the property transferred would be for deferred gain. In other words, my old pickup, if I had another business, it's worth 13, but now fair market value, I've got a 2,000 deferred gain. Could be reversed. Property transaction, AB, new company. Now A is putting in $100 cash, and his basis is $100. It's $100 to the new company. Now this is putting in land for a market value of 100. The adjusted basis is only 20. The company's basis is 20, not 100. The basis of your stock will be 20, not 100. Service transactions. All right. You might be given stock for your services. Like a lawyer, he may help you incorporate for 10 shares of stock. Fair market value of the property, of the labor, 60,000. All right. Now this AB basis, but your basis in the new company would be 60,000. It'd be your basis in the stock if you give labor worth 60,000. Now A, I don't know how he recognizes $45 gain, but something with this 60 and this 15, the difference is 45. I'm not picking up on it. I wish that was there so one of y'all could tell me. Control requirements. All right, 80%. The combined voting power. If it's husband and wife, one owns 40, one owns 40, that's 80. You got to own 80% of the company to get preferred treatment. I don't know where I went with that 80%, but right here, I guess. Now here, A has fair market value of property is 80, fair market value of services is 20. He has a gain in 20. He's going to pay taxes on 20. We'll have to look at those transactions. But now, here is a dad and a son. Dad may owe gift taxes on the extra 25 shares transferred to his son. If 351 is met, so dad and son can convert their gains. Dad deemed to have made gift of 25 shares to son. Now dad's AB in the adjusted basis in the 50 shares is 20. Son's AB is 35. That's 29 cash, 25 cash, and 10 from 25 shares as a gift. All right, you got to worry about this section if there's a gain or loss realized or recognized. What is the character recognized? Is it long-term capital gain, short-term what? What's the carryover basis to the new company stock? What's the holding period? When does that holding period start? What is boot? Back on like kind of exchanges, we know cash could be boot. notes. They can take over your accounts payable, your notes payable, mortgage payable. That's like boot if they take it over. And can you give property as boot? Securities, stock in another company. Boot is not stock in transfer company. Now basis in the boot transfers basis. Equals fair market value. Basis is the new stock. We're going to have to look at problems to sort this out. Fair market value boot received, cash boot received, liabilities assumed by the new company. All increases the amount realized. Cash boot received could be $10,000. They assumed a mortgage of $50,000. That's $60,000 boot. You may receive the old pickup truck. Fair market value is $15,000. So that's what you're receiving as boot. $75,000. All right, now let's look at allocation of gain. We got some equipment valued at $30,000, and we got land valuated at $70,000. Now, percent of fair market value, 30 and 70 is 100. 30 over 100 is 30%. 70 over 100 is 70%. A and B. All right. One gets 20, and one gets 10 part of that 30,000 fair market value. And over here, this one gets 70. 70% of 30? Wait a minute, how does that work? 20 and 10 is 30. Okay, over here, 20 and 50 is 70. Okay, and where do the 20s come from? Adjusted basis. Alright, and the realized gain, the adjusted basis is what? 40. And the realized gain, if you get 100, realized gain is 60. Alright, 60. It looks to me like, where's the 1/6 come from? I mean, yeah. 10,000 is 1/6 of 60. And 5/6 of 60. Study this and tell me where that 1/5 and 5/6 comes from. Effect of 351 to the transferee. Is there a realized gain or loss? There are always realized gain or loss, but is there recognized? We'll have to see. It's not always recognized. Character, is it a capital gain or what have you? What's the carryover basis and the holding period? Alright, transfer of new company stock or debt issued by a new company in exchange for services, property, or cash equals no realized or recognized gain at all. This company gives 100 shares of stock. I don't know how I do that. They give 100 shares of stock for services, no gain or loss. Okay, let's go on. I messed that one up. The transfers adjusted basis in the property being transferred to the new company. Basis and property received. You'll have the same basis, the company and the transferor. Gain recognized by the transferor. Any reduction for loss also. New company's basis in the property received. examples make a little more sense. Bob transferred a piece of land with a fair market value of 20 and adjusted basis of 2. Well, if he sold it, he'd have an 18,000 long-term capital gain, most likely. If he gets 100% of new company stock, well, that's over 80% control. Bob has owned the land for 2 years. That makes it long-term. Since 351 applies, the new company will take an adjusted basis in the land of 2. All right? They'll take on the same basis as the owner and will have the same holding period as Bob, which was 2 years ago. Now that's easy straight out. If you own 100%, you don't have to prorate or anything of that nature. Now Bob transfers a new company piece of land with a fair market value of 20 and adjusted basis of 2. Well, that's the one we looked at, isn't it? But now wait a minute. In exchange for 50% of new company stock. If you look at this, if you look at this situation, he owns 100%. Straightforward, simple. But over here, he only owns 50%. And not the 80. Same scenario, 20 and 2. It does not apply, then Bob recognized an $18,000 gain. His $2,000 went into a new company, corporation. He had an $18,000 gain. New company will take an adjusted basis in the land of 20. So the new company has 20 on it. So Bob can turn around and they will start a new holding period. If Bob turns around and sells his company for 20, then he got his $18,000 gain. But if he sells it for 25, he's got another $5,000 gain. All right, if you transfer loss property, you got to record it at fair market value. Now, here, to prevent a double deduction, one at the shareholders level with a high basis and a high basis in the corporation, then have a loss. Reduction basis allocated in proportion to the built-in losses on a shareholders' basis. Don't make sense till we do it properly. If adjusted basis is not reduced to fair market value, then holding period will tap. Same as the holding period. If of the owner. If total fair market value of assets is more than the total adjusted basis, then no reduction is required. If shareholder elects, the shareholders can take a reduction base instead of a corporation. That would be an election. Now, transfer of liabilities. It's equivalent of getting cash. I've always said that. Assuming liability, in essence, it's treated as a return of capital and reduces your adjusted basis. You can do that. Can use this treatment as long as there was a proper business purpose. Liabilities assumed is not more than the total adjusted basis. That'd be bad. Hey, I've got 10,000 adjusted basis. This is not cooperating real good. If I've got 10,000 in adjusted basis, and you want to assume a $15,000 liability, that can't happen. Total adjusted basis are probably transferred. Liabilities cannot be more than the adjusted basis. Here, 15 is more than 10. New company assumes transferor's liabilities. Basis and transfer asset. Cash received, transferred. Gain recognized. Excessive liabilities over basis. Transfer liabilities assumed, that's same as cash. Again, the example is better. Stonebjar wants Robbie's Sporting Goods to locate in its new mall that is developing in Deaton. It offers Robbie a tract of land on the mall side upon which the sporting goods store can be built. The fair market value of the land is $1 million. Stonebjar's adjusted basis is $100,000. Robbie does not have to recognize the $1 million in income, but it must take a basis of 0 in the land. I wonder if a lot of malls do that. So, this developing company, that'll be like down in Bristol. They've tried to start 2 different, 3. They got Exit 7, then they've got one where they had, supposed to be pretty big. They've got a Lowe's there and did have one of those Bass Pro light. And then they started one down there with Bass Pro called, I guess, Tinsel, whatever it's called. But anyway, if those developers give you land, you got a 0 basis. Worth of securities is one. Ordinary loss. My son talked me into buying some penny stock. I bought some at 70 cents a share, and I just bought 100 shares, but that was $700. But that went down, probably not worth a penny a share. Times 100 shares, it may be worth $4 or $5, but I couldn't sell it for even to pay off the commission. So I wrote it off as worthless security. 144, and I took it off as an ordinary loss. An unbusiness debt can be a short-term capital loss. In other words, if Alexandra loans Safe $10,000, that's a one-time thing. Alexandra's not in business loaning money. So if Safe won't pay him back, it's an unbusiness bad debt. He can take it off as a short-term capital loss. Business debts, ordinary loss. Business debts, ordinary loss. Non-business debts, short-term capital loss. But you know these short-term capital losses comes up to be an ordinary loss anyway. You can deduct 100% of them. Ordinary loss, you deduct 100%. Don't know why they make that distinction. Section 351 is automatic. You can't elect. Lost property should be disposed of before any 351 transaction, so any loss can be recognized. You can also avoid 351 by busting the 80% requirement. However, Section 267 may prevent loss recognition anyway if the owner owns less than 50% of the company. All right, folks, that would seem to be the evidence we have now on corporations and partnerships. Now you can see what good multiple choice we can make out of these advantages and disadvantages. Multiple choice on the forms of a corporation. General limited partnerships. Limited corporations, you can see how I can make this corporation structure. Of course, we know if you're looking at organizational chart and management, you look at stockholders, then you look at a board of directors, and then you look at a chairman of the board. Now, the chairman of the board may not operate the company. The board of directors may find the president or CEO that runs the company. Now, the CEO, he may have a bunch of vice presidents under him. Vice presidents may have assistants, certain departments, and so on. You know about an organizational structure. You've been there. All right, so please try to look at these the day I record them. Try to respond to me by email, text, or call. Please keep up. All right, we will work some problems. Some of these problems I will have you to work to turn in that does not have solutions posted. Okay, other than that, folks, we've only had about a 50-minute class today. We're going to have to speed that up. Now, once again, look for an email in case I can get Hangout recorded or going. Okay, be safe, have a good day, and stay in touch, and don't get that virus. And I'll be talking with you no later than Thursday. Bye now.